Good day, everybody. Jeffrey Beamer here, Senior Investment Strategist over at ewotrader.com. Welcome to Earnings Call. We have we have a great show for you today. And if you're not really sure what we do here, we don't just talk about stocks. We talk about stocks who have earnings and how to profit from those earnings announcements. So we do this each and every week. In fact, this week, the week of August 11th, right now, we have a modest slate of earnings coming up this week. There's a few big names, including Cisco, Applied Materials, John Deere. But there's going to be some other stocks we're going to talk about. In fact, there's over 400 companies that declare earnings this week. And we're only going to talk about just a handful because I'm going to give you the best opportunities of the week. So you're going to want to stick around because I'm going to talk about last week's trade, which you're not going to want to miss. And then I got another trade for you this week. So sit back, relax. Here we go. All right. We actually have, I think I mentioned 400. Actually, this week we have over 685 stocks, companies that declare earnings this week. I'm watching 43 of them. I've narrowed down this list here to just a handful. The best opportunities of breakout stocks, meaning stocks are going to move more than 10%. We don't know that for sure. Okay, that's just what the market makers are pricing in. Okay, that's on the left-hand side of the sheet. And then on the right-hand side of the sheet, we have the quiet stocks. Okay, where market makers are pricing in moves that are less than 10%, so single-digit moves for the stocks on the right-hand side. So we're going to start with those quiet stocks. All right. And as we get into the charts, we're going to start with Cardinal Health here. All right. Cardinal Health will have earnings tomorrow on Tuesday, August 12th, before market open. The average move here is just 5%. Now, I really like doing trades on this, and the trades that we do involve selling option premium. We do this through a strategy called an Iron Condor. And when you have a stock that's up here mid 150s or even higher, mid $100 or higher, we really like those because it gives us a lot of room to sell option premium. So here, since the average move is about 5%, market makers are pricing that in right now. You could probably still get some decent premium, even 8% away from the money, 10% of the money. So this is a stock that we like to sell premium in going into earnings tomorrow before market open. Okay. Now, later in the week, so starting on Wednesday, we have H&R Block. All right. And believe it or not, this big candle back here on the previous earnings announcement, that looks like a big move. Believe it or not, at the end of the day, it was only down 5%. Okay. And the reason why I wanted to highlight that is because the average move here on H&R Block is just 7%. So this company will declare earnings Tuesday after market close. So tomorrow afternoon after market close. And again, only a move of around 5 to 6% is being priced in. The average move is 7. So if we were going to sell premium there, we definitely want to go, but maybe at least $5 away from the money, probably $6 or $7 away. If we could get any premium at that level, that's where we would like to sell our options as part of the Iron Condor. Okay, so and then one of the bigger names this week is Cisco. Cisco will have earnings on Wednesday, August 13th, after market close. The average move here is less than 7%. So it's a bit of a mover, but I would want to definitely get $7 to $8 away from the money. So meaning 10% or more to form my Iron Condor. And you can see that the volatility on this has picked up a little bit. The last earnings cycle back here in May, we were expecting a little nothing but about 4% move, and the stock moved 4.5%. Okay, so it started picking up volatility a little bit, and now that has crept up to about 7%. So just keep an eye on that as you are paying attention to stocks that have earnings this week. All right. Now, also on the quiet list, we have some bigger names that you might be familiar with. Okay, so John Deere. Look at this stock. This is a $500 stock, but yet it has been stuck in a trading range here since its last earnings announcement back in May. Okay, the stock was on a little bit of a rally in that late April, early May, but then after that last earnings announcement, it has just gone dead quiet here. So John Deere will declare Thursday, August 14th, before market open. All right. The estimated move here, or the average move, is about 7%. So being a $550 stock, we should be able to sell premium well away from the money and well beyond the average move of the stock. So this is also one that I like. It just depends on if I can get. I prefer to do really no more than $5 spreads, unless you have a larger account. Then you can do a little wider, $10 wide spreads. But really, I like to focus at $5 or less when I sell option premium, because we do verticals. Okay, we do vertical calls and vertical puts above and below the stock price to create the Iron Condor. And if you're not really familiar with what that strategy is, it's easily found on every trading website. There's usually a glossary or a definition of terms, and you can learn a little bit of that strategy. Or you can come over to trading.com and focus on our education and our publications there, because I send out a publication alert on stocks just like this each and every week. And we do trades around stocks like this. Okay. Now, also on our quiet list, the last stock we'll talk about that's on the quiet list is Applied Material. Okay. So, yeah, believe it or not, Applied Material is on the quiet list. The average move here is about 8%. Okay, in fact, it's a little less than 8%. They will declare on Thursday, August 14th, after market close. Now, as you can see, this is a $185 stock, and this stock is a mover, except around earnings. Okay, so you can see the volatility here as it goes through, in between earnings. Look at the scaling here. The scaling on our chart is $10. So this stock can easily, look at this, from June at 157 approximately. By the 1st of July or the end of June, it was at 184. Okay, so from 157 to 184, the stock moved. So this stock can really move around. Great stock if you want to own a stock that moves, so you can collar it. Okay, if you're not familiar with what a collar is, we do talk about it quite a bit in our insiders group that we provide for our subscribers. But otherwise, we're just focused on the earnings. And the earnings this week, again, we expect less than a 8% move for Applied Material. Now, because of the tech sector, because of the sector it's in, may be a little careful here. Okay. In fact, an idea might be to look at maybe selling just the put spread and not the call spread, putting it down here, maybe 160 or 155, well away from the money, well beyond 10%, just in case the stock does kind of move. Why a put spread? Well, because if we get into trouble, meaning assignment or exercise, we end up owning the stock. And with this stock being the stock that it is, that might not be a bad sector to own the stock. So that's why we might look at selling a put spread instead of the call spread combined. All right. Just an idea there, just throwing that out there. All right. So that is our quiet list for this week. Let's jump into our more volatile list. And let me show you an example of a volatile stock. Okay. Usually Pfizer is on our quiet list. We didn't show that, but that's what we usually show. This is Akamai that you're seeing here. Akamai is a historic mover, except its last earnings announcement, which was last week. Okay. It only moved 5%. Historically, this thing moves 15, 20%. Okay. The average move on Akamai is well into the double digits. This is what a mover looks like. The scaling on the chart you see is in $5. So this stock, as you can see, can really move around through its earnings. And every now and then, even the big movers have a quiet. That's what happened to Akamai last week. But this is an example, okay? Just an example. So let's get into our list for this week. Okay, and you can see that there's maybe some names that you don't know, but we're going to start with AST here, AST Space Mobile. Always love the name here. ASTS is the symbol here. They're going to declare later today, Monday, August 11th, after market close. The average move here is 20%, okay, on this stock. Now, this is a $46 stock, so you're talking about an $9 move on the stock, which it can definitely do. The problem is that the option market makers price that in. Okay, so if we see an average move of 20% and yet they're expecting a move of 20%, doesn't really give us an edge. Now, for these stocks, we're trading a straddle or strangle. Okay, just buying a call, buying a put. A straddle is at the same strike price. A strangle is at two different strike prices. So you buy the call at one strike price, you buy the put at another strike price. So straddles or strangles, and we just look for that big move, but we look for an edge where pricing might not match what the average move is or what the historical move is of the stock. Space Mobile is just one of those where it's not a bad stock at $46. The straddles and strangles are usually pretty affordable there, but the 20% move is what's pricing up those options right now, and we got to watch for that. Okay. Now, Oklo is another stock that we like to watch here, and for some reason, I don't have my target there. So let me pull that up here and just give you the average move here, and that stock, which is going to declare later today, has an average move of 16%. Okay, so Oklo is going to declare today after market close. The average move here is 16%. So $73 stock, 16% move. Again, this stock is a typical mover, and we would expect the same today. So we'll just take a look at that. Oklo is one of our consistent makes consistent appearances on our publications, and is one that we like to trade going into earnings. And again, today, even though it's down 2.43% already on the day, we're looking for that big move tomorrow morning, and would hopefully profit from either a straddle or strangle that we put on Oklo. Now, moving on to Wednesday. Okay, Wednesday we have Brinker International. Now, Brinker owns a whole slew of restaurants. If you're not familiar with them, you can kind of Google them. But everybody from Chili's to Landry's Steak, Landry Seafood, and others, they will declare earnings on Wednesday, August 13th, before market open. The average move there is just under 17% for Brinker. So this stock is a mover, and it is also right at around just under $150. And you can see the scaling here. It's in $10 increments. So here recently we've gone from 185 down to 152 in less than a month. Okay, so it can move, and then all the way back up to 165, and then now down to 149 in just 2 weeks. So Brinker can move around. We're just concerned with what's going to happen through the earnings announcement. That'll happen Wednesday morning, and we'll take a look at it. We'll keep an eye on it, as we would put a straddle or strangle on this going into that earnings announcement. Okay. Now, another favorite of ours is Advanced Auto Parts. You can see the last earnings announcement back in May. We had this big pop. Okay. This stock was trading down here, closed the day before earnings at $31. After earnings, it opens up the next day closes the day at $49. So that big mover. The average move here on Advanced Auto Parts is about 20%. Okay, so they're going to declare Thursday morning. That's going to be Thursday, August 14th, before market open, and a possible big mover for Advanced Auto Parts. That's AAP, and this is a $58 stock. So the options will be relatively affordable. Okay, relatively affordable for a straddle or strangle. And we're going to close out the week with a stock that, I don't really trade $10 stocks. Okay. But I do like the old logo for gambling.com. The .com is a poker chip, and kind of just a neat play on their name. They will declare Thursday after market close. That's Thursday, August 14th after market close. And believe it or not, this stock has an average move of 21%. Okay. And you can see the big drop that they had on their last earnings announcement. Could they get a big pop this time? Now you see the scaling here is in 50 cents. I'll compress that at least to $1. And this stock literally went from $15. It opened at $14.95 and closed that day at $12.52. Now that doesn't sound like a big move, but for $14.95 stock, that is a big move on a percentage basis. So I just wanted to throw that one in there, and that'll give us a little idea into what's going on with gaming. All right. So that is our list for this week. So we'll pop up the complete list of our stocks that are definitely in our focus this week. And you can see a couple we didn't cover, nice Rigetti and Grail on the breakout side, JD.com and Franco Nevada that Franco may have declared this morning. So, but I would need to check on that. But JD is an example of a stock that used to be on our breakout list, in fact, but now is on our quiet list because the volatility has been sucked out of the stock. So now it's on the quiet side. All right. So that takes us to our list of stocks. And if you that we're going to show you how last week's trade did, and then I'll also give you a new trade alert. So if you like this sort of stuff, because I give out trade alerts each and every week, go ahead and like and subscribe to us. Like the video, subscribe to the channel, hit the notification bell so you get a notification of when this hits the airwaves each and every week. I do this show live on Mondays. Okay, so let's take a look at how we did on last week's trade, and that was on Lemonade. All right, now was this sour or was this sweet? Well, we're going to take a look. What we did was a straddle here on Lemonade, and we were looking for a big move, which the last earnings announcement, it really didn't move very much. It was a little bit of a disappointment. So how did this week turn out? Okay. And I can tell you it was pretty darn sweet. All right. We had a big move in Lemonade, up double digits on the earnings announcement. And then we kind of held on to it for a day and let it, just to see where it would go. And yes, we had follow through to the upside. So that was 132% return in just 2 days. Okay. We had an $800 profit on a trade that cost us about $560, $550, somewhere in there. Okay. So a 132% return on risk. Okay. In just 2 days. That is the power of these breakout stocks when you do the right strategy on the right stock at the right time. Okay. So in fact, if for some reason you still are in Lemonade, well, guess what? You're going to make even more than that, because on Friday or Thursday, I believe the stock actually pulled back a little bit. Friday was quiet, but then today Lemonade's up again. I think it was about 6%. In fact, I have it up. It's up now 7%. Again today. Okay. So, if for some reason you're still in this trade, take your profits. You have a lot more profits than just $800. You probably made over $1,000 if you were still in the trade, but we took ours off last week, and that is how we did. And that gives us back to the winning side. We had a losing trade the week before on a stock where we did an Iron Condor, and we lost the max amount over 370, right at $370 was the loss. Well, guess what? This is why you have to keep on trading, because here, profit of $815, not only did that make up for that loss, but that added to our profit, which we're having a great year here right on this show this year. And because we've been hitting winner after winner, an occasional loser, but winner after winner each and every week. So what do I have for you this week? Well, I'm going to have Brinker International. Okay. Just this stock is setting up. I did like the setup before Friday's trade. It did. That little drop kind of went, because I like when a stock consolidates going into that earnings announcement, but it's still in the trading range that it had there for about the past 2 weeks. So that was okay. And we are looking at a trade that really would be limited to those that have trading accounts of $20,000 or more. Why? Because the debit here is going to be about $1,100 for the Strangle. Okay, because this is a $150 stock, and those do get a little pricey. But we are expecting a big double-digit move from Brinker, so that is our example for the week. So this is a Strangle. You buy a higher strike call, you buy a lower strike put, and those two debits combined is the risk in the trade. And again, we're just looking for that big breakout. So I hope you enjoyed the show today. Nice and short. We just have a handful of stocks that we've been focused on. Brinker International is our trade of the week. So be sure to increase your knowledge and keep on trading. And I will see you right back here next week. Everyone have a great trading week. Take care.